Cathie Wood has chimed in on the Delaware decision. She has on X overnight. She says these things. I believe the Delaware court decision forcing Tesla to void the March 2018 vote on Elon Musk's performance-based pay package is un-American, an assault on investor rights, and an insult to the board of directors of one of the most stunningly successful companies in U.S. history. It's ruling against Elon Musk, she says. Pay for performance compensation package. Delaware seems to question whether it was fair to all shareholders. Well, she says, given the results 5 years later with Tesla up 13-fold from the time of the vote to its peak in November 2021 and still up 9-fold today, I would like to understand what Delaware means by fairness. And of course, the Delaware judge said she couldn't define what fairness would be in this particular case. So why is she a judge? She goes on to say, I have known Robin Denholm, chair of the Tesla board, professionally for 17 years since she was named Juniper Networks CFO in 2007. Robin was and is an independent director on Tesla's compensation committee. Robin is a professional of unquestionable integrity with a no-nonsense, objective, truth wins out philosophy. In 2014, when Tesla named her to its board, I remember thinking that she would add a fresh pair of eyes and enhanced rigor to every part of the process that she touched. Going on, she says, working with ARK Invest general counsel, who analyzed the 200-page Delaware court decision, I have concluded that legal nuances and the controversial interpretation of them have missed the forest for the trees spectacularly and unfairly. Tesla's board incentivized Elon Musk with an Herculean task that most analysts and auto manufacturers did not believe was possible. Based on our research center based on Wright's law, we believe that Tesla could meet the performance goals, but only with a brilliant execution. In fact, we were thrilled to learn in February 2018 that Elon Musk and the board were aiming so high, reaching for meaning ARK's bull case price target in 2023 of $4,000 or $265 a share on a split adjusted basis, a 13-fold increase from roughly $21 a share when I announced our price target on CNBC. On behalf of our clients, ARK Invest voted for Elon Musk's compensation, as did 80% of shareholders. Nearly 5 years later, a Delaware judge has overruled the board and shareholders, the latter whom had the benefit of ample debate about the incentive plan's probability. Agreeing to no salary during those 5 years, Elon also would have received much less performance-related compensation if he'd only achieved less than the lofty milestones associated with our bull case. Instead, he shocked and delighted shareholders. In other words, there was 10 tranches. He might have only made 5 of those tranches, or 4, or 3. She goes on, thanks to Elon's ingenuity and dogged determination, Tesla hit our bull case target price in 2021, 2 years earlier than we anticipated. She had it at 2023. Since then, many shareholders have shared stories with us about how our research inspired their investment in Tesla and changed their lives. They bought their first homes, put their children through college, added to their retirement nest eggs, thanks to Tesla. Tesla's story epitomizes why people have flocked to America. The Delaware court's decision is an embarrassment to our country's ideals and a travesty. So this is Randy Kirk. If you like what we do on this channel, please hit the like button. If you're feeling lazy and you don't want to do it anyway. I need you to help the channel. We're getting really close, by the way, to hitting 20,000 subscribers. We're less than 150 away. I didn't check it this morning, but anyway, we're around that. So if you can subscribe and you haven't already done it, that would be a great help, because 20,000, I understand it unleashes some extra, it's like gaming. You get some extra stuff from Google when you hit 20,000. Later this morning, we will have Larry Goldberg on, and we will be going through Cathie's report, which instead of coming out on Friday night or Saturday morning, finally came out on Sunday morning. And now we've had a chance to really go through it, and he and I will take it apart line by line. And that means Brian White will be moved to Wednesday and Thursday. I believe it looks like we're going to have Warren Rudlick on Thursday, and maybe Sir Basher on Friday. Anyway, we'll see what's happening with all of that on our kind of our noon show. All right. Please, notify. If you want to be notified of all those things, you want to hit the notify button, then you want to buy some Cybertruck, some Cybertruck, these things, the bottle openers, and then also sign up for Patreon. According to this morning's news coming across, this is last night. Fed Chairman Jerome Powell made an appearance on 60 Minutes last night. He stressed his going slow on lowering interest rates mantra. The impact is being felt this morning with a huge bump in 30-year bond yields now well above 4.1%, where it shouldn't be. There's no reason to be. It's just crazy. This move is taking place even as inflation, as measured by Truflation, continues to be under 1.5 at 1.4 for the fifth straight day. So it's beginning to look like this is the real number. We'll be seeing the CPI not this week, but the following week. We'll see what happens with that. I just don't get it. It's completely blowing my mind. Moreover, you have the stock market in China stopping trading last night on over 30% of its stocks due to another 8% plunge. This from the Kobeissi letter. He says, breaking, China's CSI 1000 index is now down 8% and 30% for the first month of 2024. Over the last 10 days, China's CSI 1000 index is down a massive 21%. Now, this just minutes ago, China's government pledged once again to help stabilize the market. And then even in my research, that was all from Kobeissi last night. In my research this morning, China's stocks are starting to rebound because the stimuluses promised by China's government are coming into effect. You got to know that this whole thing with China is going to affect markets worldwide. It's going to affect Tesla. People are not going to look at this China thing and go, oh, well, Tesla will still sell tons of cars in China. Now, they might, quite frankly, completely sell everything they can make out of Shanghai because the factory is pretty close to maxed out, and they have all these export markets that they ship to and more export markets that they'll be adding. They just added Chile. Not 100% sure whether Chile will be shipped out of the U.S. or out of China, but my guess would be China because the cars are less expensive out of China. Anyway, more export markets will be opening all year, and as that happens, it'll put more demand on Shanghai. So if you look into the nuances, this morning's news probably shouldn't be affecting Tesla stock. My guess is it is affecting Tesla stock, and it's one of the reasons, one of maybe 3 or 4 reasons why Tesla is down strongly this morning, when overall the NASDAQ is down, but not that bad. So, but there's more reasons, of course, as you know, and that would be the whole thing with the Chancellery Court. It would be all of this news that came out over the weekend from the Wall Street Journal that wasn't news because it was repeating stuff everybody already knew, but it made headlines again about Tesla, about Elon and drug issues and whether the board is independent enough and all this kind of stuff. And just a hit piece, really just a pure out hit piece over the weekend by the Wall Street Journal. Sad, very, very, very sad. From Yahoo Finance this morning, companies that are hiring or keeping their employees are reducing their hours. Hours worked have declined in a way that you typically see around a recession, according to Lakshman Akuthan. He must be spelling his name his whole life. Co-founder of Economic Cycle Research Institute, he told Yahoo Finance Live. So one example would be retail. The sector's challenging landscape amid a shift in consumer buyer habits has forced companies to make tough choices. Average weekly hours fell to 29.1 in January from 30.2 a year ago in January, according to the Bureau of Labor Statistics. Now, a lot of that has to do with people, and they're shifting their buying habits out of going into brick and mortar stores and buying online. I'm a perfect example of that. But the reality is that is a 33% drop. I'm sorry, I misread that this morning. That's a 3% drop from a year ago and a trend line, I think, that is continuing, but we're seeing it elsewhere. when we have that conversation later, Larry and I, when we're talking about Cathie Wood's report, she goes also deeply into this Bureau of Labor Statistics numbers from last Friday. And I think you're going to find that the employment numbers are not that great. And I like Cathie's take on it. I think you'll be interested in that as well. So be sure to look that up here just in a little while. With Larry. Okay, let's take a look at where the market is right now. We've got Tesla down 573. As I mentioned, it's being buffeted by these issues that probably have absolutely nothing to do with the fundamentals of Tesla. There was also a couple of, I wouldn't call them downgrades. There would be analysts who are saying that there's a technical, that technically Tesla should be under pressure during the next few weeks. Maybe during the first quarter, you might see Tesla testing the 150s, a couple of different people saying that, and that could be also weighing on the stock this morning. However, in one of those cases, that test of the 150s would then be followed by a run-up to maybe 265 and potentially breaking through 265, going back to all-time highs by late in the year or early next year. So there you have that. Okay, so what you have is Tesla down $5.77, the Dow down 159, you got the NASDAQ down 52, S&P down 500, and the Magnificent Seven are really, really mixed. So you've got NVIDIA up 24, but Meta down 13. So Meta, so okay, there you go. You've got Apple up 59 cents, Google up 227. So it's all over the place. Amazon now down 382. I mean, it's just crazy all over the place here. And then you've got the Cathie Woods are down pretty much, yes, 100% across the board. Now let's go look at these on percentage basis. You've got the Dow down 0.41 and NASDAQ down 0.30, S&P down 0.23, and then Tesla down 3.12. Let's go ahead and jump into those bonds and see, because that's that's another thing that's hurting Tesla this morning. Bonds up, Tesla down. Bonds up, Cathie Woods down. This is a common thing. So that would be 4 different reasons for Tesla to be down this morning. All right, so we've got the 10-year down, the 10-year yields. So the bonds are down, yields are up, 4.121, up 9 basis points. Pretty much all of the long-term bonds are up similar amounts. You've got the short-termers are down, are up. The yields are up. Yields are up across the board. Yields are up about 9% on the long terms, about 3% on the short terms. So continuing to see the inversion widen out again. The inversion widening out again after 19 months. And it's supposed to be signaling a recession. I don't know. I still 50-50 on this whole business of whether we're going to have a recession this year. I was so right last year. I hate to be wrong this year, so no, I'm kidding. I'm just thinking, so much confusion. In fact, that's another one of Cathie's mantras. And when she talks over the weekend, she says, it's confusing. There's a lot of confusing stuff going on. It's hard to pick what's going to happen next. All right, let's take a look here's more confusion. You've got, with all the stuff going on in the Middle East and everything else, you've got oil down 52 cents this morning, 71.76, looking like it's going towards the 60s. I mean, you've got Brent following about the same as in down 38 cents. You've got natural gas down again, half a percent. You've got gold now. Okay, so you've got the interest rates up, but you've got gold down 20. You've got copper down 1.33%. You've got silver down. You've got the dollar hitting 11-week highs, okay? Because why? Because interest rates are up. So at least those two make sense together. So then you've got Bitcoin. This is, I have no idea. Bitcoin, it's up 476 points at 43,181, almost exactly in the trading range it's been for quite a while. And then, of course, that rounds out everything that we look at every morning. We've got stocks. I'm sorry, we go back here to Tesla is now recovering a little bit, down $5 a share. It was down over 6. Market's about the same as what we just talked about a minute ago. All right, so where are things going to go today? I don't know. The bonds are being crushed. The bond market, the value of the bonds going down, down, down this morning as the interest rates go up. I think, again, not investment advice. I think bonds are maxed. This is where they bounced last time, around this level, about 4.2. So I wouldn't be shocked at all to see them bounce well down. It might not happen until CPI next week, or maybe if trueflation continues to be at these numbers for another few days, maybe there'll be some the Fed speakers all this week. You must have, I don't know, 10, 12 Fed speeches this week. Any one of those could cause a lot of action. But yeah, continue to have this mixed up game this morning. So Larry Goldberg later this morning with Cathie Wood. Tonight, Larry Goldberg back again as we do Good News Monday night. Tuesday will be Brian White, and Wednesday. All that stuff coming up. So please hit notify. In order to hit notify, you need to subscribe and then hit the like button. Join Patreon. I need more support on Patreon. I just need it. Need to have it. Okay. All right. That's all I got for you right now. Until later this morning, it is Randy Kirk. It's been great talking to you.